Good afternoon, and thank you very much, Representative Montgomery. I'm told that snow that Dallas-Houston area may swing over to South Carolina, and people are real excited. How many fools there you think will talk about a white Christmas? Oh. Thank you for this opportunity. I know you do a wonderful job. I enjoy working with Michael Huff on the Commerce Committee, and I appreciate the opportunity. CFSA greatly appreciates the opportunity to sponsor the luncheon and have a few quick remarks. I'd asked Michael what we were supposed to talk about, and I found out later, and I said, well, would you like to hear, should I talk about some Democratic jokes? And he said, no, too many get elected. So, right. Pleasure. I saw Representative Liston Barfield, who's on your board, and was with him and his wife Norma Jean the other night, and thank you for his service. I do want to real briefly tell you, give you a little bit of information about the creation of the Consumer Financial Protection Agency, CFPA, that's going on up here. And I don't want to take a great deal of time because you have a great speaker in Dr. Roberts who's coming to talk about a lot of things as far as the economy, and I certainly want to hear him. As some of you, and hopefully most of you will know, and I know Michael and all the Michaels, every time I met somebody from ALEC today, it was Michael. Well, hello, Michael. Hey, Michael. Hey, Michael. Lots of Michaels here, and I guess that's good. ALEC has your website now has the button to push to hear about or learn about the CFPA. As you know, this is supposedly intended to prevent another financial meltdown by consolidating and expanding the oversight of lots of financial institutions that caused last year's economic meltdown: subprime lenders, investment firms, hedge funds, and the too big to fail banks. But, you know, as happens sometimes in the legislative process, I guess especially in Washington, some consumer activist groups and a few members of Congress are using the CFPA as a legislative vehicle to push regulation of every financial service, including non-banking lending, pawn loans, title loans, installment loans, and payday loans that traditionally have been regulated by the states. These current CFPA proposals would give either a single unelected federal czar or 5-member board or commission of civil servants the authority to disregard anything and everything at the state level. For this reason, virtually every state-regulated financial service, including my organization, the Community Financial Services Association of America, opposes the creation of this agency. And our fear, and I think I can safely say the fear of all financial institutions, is that the CFPA will get involved in areas of public policy that are traditionally and appropriately within the jurisdiction of the legislative branch. For example, any individual state has in its judgment decided to allow certain products of credit to be offered to serve the needs of their constituents. An unelected CFPA point person could, without any congressional oversight, simply ban that product, of course, all for the benefit of the consumer. And according to the current proposals, the unelected person in charge considers, if they consider that product unfair, deceptive, or abusive, as it's being offered in the state, the CFPA can then just prohibit the product or service outright or impose limitations or conditions that in effect would have indirect prohibition of the product or service, even though a state legislature through the legislative process has created the financial service or product. The short-term low-denomination credit market, as we know, is too important to be tampered by an all-powerful federal financial wizard. Payday loans are typically $200 to $300, are part of the short-term credit market that together with overdraft protection provide more than $100 billion in short-term credit to consumers looking to cover a check. And we all know that if you take away an option you haven't solved the problem. The demand is still there. As consumers consider all these short-term credit options and choose the least likely alternative service that meet their need. That's what we're all about, transparency. Let the consumer have that choice. Research also indicates that in most cases, consumers are extremely informed about the cost of the services, and they make their own good financial choice given limited options. It's my understanding, from what I hear, my fear that the CFPA will reduce competition in the short-term credit market by restricting either of these services or both, and will drive consumers to the more expensive services. Our members at CFSA have been working with you and other legislatures for over 10 years to make sure that we have regulations that protect the consumer, offer this financial product to suit each state's need. Federal preemption of your state laws by a federal agency will not benefit the consumer. There's always a chance that some form of CFPA will pass through the Congress and signed into law. As you know, right now, the House, I think it's next Wednesday. Well, Tuesday it goes to the Rules Committee, and Wednesday it goes to for debate. And it's on the fast track, to say the least. And on the House side, it's all bundled up in one big package. And it's what our fear right now. There's no mention of that ban or specific restriction. But you and I know in the amendment process, anything and everything can happen. On the Senate side, Chairman Dodd has got a bill that as I understand, he's asked a panel of 2 senators, a Democrat and a Republican, in 4 or 5 areas to take a look, and let's see what will happen. Members of Congress are going to be debating this, so I would ask you to please contact your congressional delegations and strongly urge that provisions to be added to prevent an appointed CFPA from obtaining this unchecked power to overrule the actions of your state legislature. If you don't, I think you're going to see some problems, and I know you got it on your website. I would hope you also might consider passing a resolution to that effect. Let me conclude by saying this is fundamentally states' rights. And being from South Carolina, I know that sometimes states' rights can be carried to the extreme. But we don't want to fight a war over this thing, but we want to, not blood and guts, but you just want to win, okay? There's never been a federal agency that one size fits all. I know that supposedly this new agency would take from various other agencies, but I don't think you'll ever find that an agency that's created is going to completely go away. I did hear that the Office of Thrift Supervision would no longer be in existence, in some version that it would be folded in. And I know that may be a popular thing for some folks up here talking about czars, but a single Washington, D.C. based financial czar should not be allowed to override decisions that you have deliberated for decades in your House, in your Senate. So I would ask you to please do your part to make sure that your congressional delegation, your constituents know that what sounds good, and it's kind of been under the radar with all the other health care and war and jobs and cap and trade, it's kind of been under the radar. So I would ask you to please be informed, go to your own website, speak to your constituents, especially to your congressional members, and make sure they're fully informed. Now, I tried to do that quickly so you can hear from Dr. Roberts. I don't know exactly how much time I got left, but I think it's like 1 or 2 minutes if there's a quick question. If it's a trick question, I've got a young lady here with me who can answer it. Kara Marshall works with the federal team, and she's an attorney from Ohio, and she's an Ohio State fan, but I don't hold that against her. No questions. Thank you all very much. It's been my pleasure.